Good morning and welcome to Morning Markets with True Potential. Checking up on news and developments of the last 24 hours. A much calmer day for markets overall yesterday, given we had a very rough ride on Tuesday. Markets in the US started on a little bit of wobbly day, but ended the day on the positive note. Asian and European markets overall were actually catching up from the big moves, big falls we saw in the US, and largely were down overall. FTSE was down over 1% on the day. Dollar, which was a big gainer on Tuesday, gave some of those gains back yesterday. Bond markets, on the other hand, were also more steadier yesterday. We saw 2-year bond yields in the US edged up a little bit higher at 4 basis points and ended the day at 3.8% yield. Though we saw some pullback in 30-year long-end bond, 30-year bond, which came in around 3 basis points on the day. Similar moves were also seen in the gilts market, where we saw 10-year UK gilts coming in around 3 basis points lower than what they started their day. But touching on inflation number, which was a big story from yesterday, and Matt and Jeff, we spoke about to you yesterday briefly on that. We saw a biggest fall in inflation over the 1-year period. We saw August number came in, headline inflation number came in at 9.9%. That is a drop from 10.1% we saw in July. What is fueling that drop? Clearly, the petrol prices and fuel prices are the big tailwind in softening of that inflation pressures. On the flip side, though, we saw food inflation coming at the highest level. We saw daily essentials like milk, egg, and cheese rising at the fastest level. So let's see how it develops in the coming months. That said, overall, we think that our outlook for inflation is brightening a bit, especially if we keep in mind that Truss's plan to limit the household pain for energy price, energy bills overall. That should help ease inflation over the coming months. We believe that combine that package with the petrol prices, which have been coming down steadily over the past few weeks, we could see that around somewhere between 4 to 6% drop in inflation overall in the coming months, but it will be gradual and very slow process because we still have this October price cap from Ofgem to play this out. What it all means for the Bank of England? Yes, it gives them some relief overall to have measured pace in their rate hikes, but nonetheless, all the measures you focus on inflationary pressures are still high and way above their 2% target for inflation. So we expect them to continue raising rates well through into 2023. In other news elsewhere somewhere in China, we saw our International Economic Energy Agency also highlighting that they saw a deepest cut in the demand, in the oil demand in China, which also adds to the overall gloom we have seen we are hearing in China overall. And separately, we also saw Chinese authorities have been in conversation with Moderna regarding the COVID vaccines, and it could be a big development and see how it evolves from here, because given the lockdown situations we have seen over the past few months. What happened this morning and then for the rest of the day, we saw German inflation numbers also coming a little bit softer overall. Let's see how the markets react to that, opens to that news. For the rest of the day, we have one big number, which is a US retail sales data out in the afternoon. Expectations are largely for the flat number and see how consumers are holding up. But any upside surprises there could put further pressure on Fed to raise rates further in the next week. We will keep you posted on how these developments work out. For now, we'll leave it there, and thank you very much for watching Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.